The early 19th century witnessed a major shift in European finance. This period laid the groundwork for private banking networks. These networks would soon play a pivotal role in the economy. Private banking offered personalized services to wealthy individuals. These services included wealth management and investment strategies. The rise of private banking reflected growing financial sophistication. A banking network emerged, transforming Europe's financial structure. This network operated as a private enterprise. It was not a government-controlled entity. The network's influence quietly reshaped the financial landscape. Its operations were distinct from public financial institutions. This marked a shift towards private sector involvement in European finance. The network's operations began in Frankfurt. A strategic decision was made to expand across Europe. The network extended its presence to 5 major European cities. This expansion was strategically planned to broaden its financial influence. Each city was likely selected for its economic importance. This created a significant financial footprint across Europe. Decentralized operation allows each branch to function autonomously. This independence fosters localized decision-making. Localized decisions enable quick responses to regional economic conditions. Agility in response to regional conditions is a key benefit. Therefore, decentralized operation promotes adaptability and efficiency. The network employed private couriers for physical transportation of sensitive materials. Encrypted correspondence was used to protect written communications. This combination ensured secure information exchange between different branches. The system prioritized both security and speed in its operation. Private couriers offered a controlled chain of custody for documents. Encryption rendered intercepted messages unintelligible without the correct key. The communication infrastructure supported cross-border lending activities. It enabled synchronized market movements across different regions. This synchronization enhanced the overall efficiency of the financial network. The mechanism expanded the network's reach, connecting more participants and markets. The banking system has historically been a key driver of financial innovation. Early innovations included the concept of sovereign lending. Sovereign lending involves banks providing loans to national governments. Another significant innovation was the underwriting of government bonds. Underwriting involves banks guaranteeing the sale of government bonds to investors. These innovations facilitated government finance and economic development. Sovereign lending refers to the practice of providing loans to monarchies. These loans were essential for monarchies to finance state operations. Sovereign lending also supported various projects undertaken by the state. Monarchies relied on these funds to maintain stability and power. Sovereign lending played a crucial role in the financial structure of monarchical states. Underwriting government bonds involves financial institutions guaranteeing the sale of new bonds issued by a government. This process provides governments with essential capital for funding various public projects. The funds raised through bond sales are often directed towards infrastructure development. These projects can include the construction of roads, bridges, and public transportation systems. Government bond underwriting also supports broader national development initiatives. This support can facilitate improvements in education, healthcare, and other vital sectors. The system implemented new risk management models. These models were crucial for navigating the volatile 19th century financial environment. Effective risk management was essential due to the unpredictable nature of the financial markets. These models provided a framework for assessing and mitigating potential financial risks. The network facilitated the movement of capital across international borders. This capability established new benchmarks in international credit transactions. Cross-border capital flow promoted increased trade activities. It also stimulated investment opportunities on a global scale. The network's power stemmed from its ability to operate discreetly. A key advantage was its privileged access to government bodies. The network also maintained close ties with influential figures. This access provided unique opportunities for strategic advantage. Discretion ensured that operations remained largely unnoticed. The combination of access and secrecy amplified the network's overall influence. Close relationships with governments provided strategic advantages to the network. These relationships enabled the network to engage in peace settlement negotiations. The network could exert influence on diplomatic outcomes through governmental ties. Maintaining these relationships was crucial for achieving specific objectives. Governmental collaboration facilitated access to resources and information. This strategic alliance enhanced the network's overall operational effectiveness. Currency stabilization is a key factor in promoting global economic health. A stable currency reduces the risks associated with international financial transactions. The network played a crucial role in stabilizing currencies. This stabilization facilitated smoother and more efficient international trade processes. Currency stability directly reduces economic uncertainty for businesses and investors. Reduced uncertainty encourages investment and fosters economic growth. Financial power can extend its reach beyond mere monetary transactions. It can significantly impact diplomatic efforts and international relations. This influence is exerted through carefully planned strategic financial interventions. These interventions are designed to shape global politics and alliances. The network strategically influenced trade routes to foster economic growth. This influence was exerted through financial support for key infrastructure projects. These projects included roads, bridges, and ports, essential for efficient trade. The network also streamlined cross-border transactions to reduce trade friction. These combined efforts significantly promoted economic expansion in the regions served by the trade routes. The network played a crucial role in supporting industrial expansion. It facilitated the provision of capital for various essential industries. Mining operations received financial backing to increase production. Railroad construction and development were also supported through network funding. By the mid-1800s, the banking system evolved significantly. It established a foundational blueprint. This blueprint paved the way for modern investment banking practices. It also set new benchmarks for financial institutions. Railroad financing played a crucial role in the expansion of transportation networks. This financing enabled the construction of new railway lines. Expanded railway networks significantly improved trade capabilities. It also boosted overall commerce by facilitating the movement of goods. Therefore, railroad financing was a key factor in economic development. Mining operations are supported through capital investments. These investments are allocated for exploration activities. Capital also facilitates the extraction of resources. This support fuels industrial growth. Resource development is enhanced by financial backing. Overall, mining operations are crucial for economic advancement. National debt management involves overseeing a country's outstanding financial obligations. A key function is underwriting government bonds to raise capital. This process provides financial stability for the government. It also supports essential state operations and public services. The decentralized model served as an inspiration for subsequent financial institutions. This inspiration fostered innovation within the banking sector. It also encouraged greater adaptation to evolving financial landscapes. The model's influence promoted a more dynamic and responsive banking environment. Private capital networks can significantly influence economic landscapes. These networks can also exert considerable influence on political landscapes. Private capital's influence can rival that of state power. This rivalry shapes the dynamics of economic and political control. Understanding this dynamic is crucial for analyzing modern power structures. The network extended beyond a simple banking dynasty. It was a complex financial architecture. This architecture transformed the way money moved. It also revolutionized government borrowing practices. The global finance system's legacy continues to shape modern financial practices. It exerts influence on the management of capital worldwide. The system also affects how capital is deployed across various sectors. Its impact is evident in the infrastructure of global finance. This influence underscores its lasting significance in international economics.